and middle income families. We have core principles that we've tried to not only articulate but to affect through legislative proposals. And these principles are very straightforward. All qualified students deserve access to a college education and affordable loans, Pell Grants, and other financial aid. It's vital to their success. Interest rates should be set higher than needed to protect, should not be set higher than needed. We just have to protect taxpayers, obviously, and make sure we are breaking even on the program. And finally, we have to ensure that when students take these loans out, they deserve predictability and certainty that they won't get locked into very, very high interest rates. So any adjustable rate should have a reasonable cap. Not only do we embrace these principles, student organizations embrace these principles. Students across this country would rather have no deal than a bad deal. And unfortunately, looking at the proposals that are current today, we're at the point where we have to, I think, do our best to extend the 3.4% interest rate fully paid for while we work on a good deal, not just any deal. We understand that a college is a means of empowerment. It is the engine that drives not only our individual fortunes, but it drives this country forward. And the proposals that are been suggested by some of my colleagues don't comport with these principles. And so today we are, as I said, offering another approach. And that is, along with 34 Democrats in total at this point, we have introduced, Senator Hagan and I, the Keep Student Loans Affordable Act of 2013. Essentially, it will once again freeze the rate at 3.4%, and it is fully paid for. It will give us the time and the incentive, and I hope the inspiration to look at this whole issue of financial debt and student debt in a comprehensive way. Not just tinkering on the edges in terms of rates, but looking at refinancing options, for example. Thinking how we can help students who are already struggling with debt to reduce their debts. And also look at ways we can incentivize colleges so that it is more efficient and not as expensive, and certainly try to contain the cost of college education. We have to do this. We have heard repeatedly over the last several years, particularly by many of my colleagues on the other side, that we cannot burden future generations with great debt. That's why we have to get the deficit under control. But frankly, if you look at these proposals, they're burdening future students with great debt. They might be cutting interest rates this year, next year, but in the long run, those debts will grow and grow and grow. And so we're simply saying that we do believe that we have to give students an opportunity. We also have to give them the kind of support they need to be able to afford higher education, and so that they can use that education to contribute to our country and to our prosperity. And now let me call on my co-sponsor, Senator Kay Hagan. Kay?
Thank you, Jack. Good afternoon, everyone. And I'm very pleased to be here with Senator Reid and my colleagues to discuss this legislation that I think is critical for so many students and so many families in North Carolina and around the country. If we don't act by Monday, July the 1st, 176,000 students just in my state and 7.4 million students nationwide, close to 7.5 million students will see their interest rates double, going from 3.4 to 6.8%. This would effectively stick those students with an extra $1,000 a year each in additional loan cost. Our students cannot afford congressional inaction that allows these student loan rates to double. These Stafford loans are need-based, with the majority of borrowers coming from families who make $60,000 a year or less. I've talked to students, I've talked to families across North Carolina who cannot bear this extra burden. I heard from a young woman recently. She graduated from college 3 years ago. She's a paralegal. She has $50,000 in student loan debt. Her husband owes another $40,000 in student loan debt, bringing their total to $90,000. They want to buy a home. They're just getting started. They want to buy a home. They want to have a family. But with so much of their monthly income going toward student loan debt, they cannot seem to get ahead and save that money for a down payment. Our young people cannot afford even more debt. Do you realize today that Americans have more student loan debt than credit card debt? We cannot put our young people even farther behind. They are our future. We need to be investing them. We cannot put college even further out of reach for our students. And we can't make it more difficult for young people to buy those first homes, buy those cars, start their businesses, support their families, or invent and innovate and otherwise contribute to our economy. So today, I am proud to introduce this legislation with Senator Reid and my colleagues that will extend this 3.4% current interest rate on federal Stafford loans for the next year. I'm hopeful that we can work together, Democrats and Republicans, toward a long-term plan. But right now, with the July 1st deadline looming just days away and no long-term solution in sight that can pass the Senate, we have got to act. We cannot let our students in North Carolina and across the country pay for the price of congressional inaction. So I'm committed to working with my colleagues on both sides of the aisle to pass this legislation and ensure that a college education is still within reach for all of our students. Senator Franklin.
Thanks, Kate. A while back, I had a number of students from the MnSCU system, that's the Minnesota State Colleges and Universities, come visit me at my office here in Washington, and they were leaders of their student government. There are about 20 of them or so, and I just wanted to, I'm always asking about the affordability of college and what students have to do. So I asked them, how many of you work, of these 20 kids, I said, how many of you work while you go to college? All of them raised their hand. I said, okay, how many of you work at least 20 hours a week while you're going to college? Most of them raised their hand. How many of you work 30 hours a week while you're going to college? More than I would have thought. How many of you work 40 hours full time while you're going to college? And a few of them raised their hands. Now remember, these kids are also doing, these students are also doing student government. They're the student leaders. And that's not rare. That's the norm now. And yet those students graduate with student debt. In Minnesota, it's now above, on average, we're third, we have the distinction of being third in the nation in terms of the level of debt students graduate with in Minnesota, at over $30,000. I've had kids, and this shocked me. They sell their blood. They sell their blood to go to school. And yet, they have this debt when they leave. We had a majority of the Senate vote for a good bill a few weeks ago that would have delayed this increase by 2 years. But it was blocked by our friends on the other side of the aisle. So here we are today introducing another bill to delay this hike. This bill would keep the interest rate at current levels for 1 year while we work out a long-term fix. And this would affect almost 200,000 students in my state. This is a critical issue. We have fallen now to 14th in the world. 14th in the world in the percentage of our population from 24 to 35 who have graduated from college. It wasn't very long ago where we were number one. This is a whole problem that we have to tackle in so many ways. But we can't make things worse for our students. And so we are talking about a 1-year fix and then working on longer-term solutions. Now I'd like to introduce Elizabeth Warren, who has been a champion on this and so many consumer issues that confront the middle class and that have squeezed the middle class in this country. It's my honor to introduce Elizabeth Warren.
Thank you. Thank you, Al. So the fundamental issue is whether or not the United States government should be making a profit off our students, making billions of dollars in profits off our students. We here are committed to wringing those profits out of the student loan program. That's going to be a two-step process. The first step, we need a one-year patch to keep interest rates from doubling on new loans. That buys us the time to go to the second part, and that is that we commit to developing a comprehensive plan to reducing the $1 trillion of student loan debt that's already outstanding and helping bring under control the rising costs of college. The Republicans have put forward a plan. Their plan moves around the numbers, but it continues the high costs for students. Make no mistake about the Republican plan. It produces the same profits. Altogether, the $51 billion for this year, the $184 billion that will be made off these loans over the next 10 years, and then it adds to those profits. That's not the direction that the United States government should go. We should not be burdening our students further. This is an economic question. Young people are hurt by student loan debt, and in turn, that hurts our economy. It's hurting housing. It's hurting economic recovery in general. But this is also a moral question. The United States government should be investing in our students, not charging them profits for getting an education. That's what this is about, and I am now very pleased to introduce Senator Harkin, who has been a leader on this issue from the beginning. Senator Harkin.
Thank you, Senator Warren. First, let me thank Senator Reid and all my colleagues for their great leadership on this issue and for putting forth this proposal. Let me just point out that Congress has had no hearings on any of the proposals that you see floating around. No hearings, including the Manchin proposal. We've not fully vetted what these long-term implications are. Now, I know that Senator Manchin and others had a press conference this morning, and they talked about how low these interest rates would be. Well, where's my chart? Nothing like a little show and tell here to show what happens here. Let me just get over here.
Oh,
So what they're talking about, and the Manchin and Burr and whatever other people on the proposal, is right here in the beginning, you get some lower interest rates. But look what happens out here. Every single loan program under the Manchin proposal will charge higher interest rates than we have seen in the past. It'll pay higher interest rates than a cap at 8.25. Every single one. Higher even than 6.8%. If it went to 6.8%, every one of theirs is higher just in a couple of years. By 2016, 2017, they all rocket up to higher interest rates. As someone once said, this is classic bait and switch. For 1 or 2 years of low interest rates, then they sock it to you. That's unacceptable. And we have heard from the students, thanks, Jack. We've heard from students who have said, no, this is not fair. It's not fair to give us a 1 or 2 year break, and then for the 8th, 9th year students who are in high school now, when they come along, they're going to get socked to the higher rates. That's not fair. That's why we need to approach this in a deliberative manner. We've not heard from any outside experts. We've not compared this proposal or any other proposals that actually might be better for students. I'll tell you, just in the last couple of weeks, I've seen probably half a dozen different proposals floating around here. But none of them have been vetted or no hearings have been held. Passing a 1-year extension would allow us to return this issue to regular order. And how many times do I hear my Republican friends say they want regular order? That's what it would do. The Higher Education Act expires the end of this year. Our committee, the HELP Committee, on which Senator Hagan serves, and Senator Franken and Senator Warren serve, we're going to start having hearings in September on the reauthorization of the Higher Education Act. And we're going to examine the full spectrum of issues that confront higher education today. Everything from exorbitant annual increases in tuitions, the impact of declining state support for public colleges, the impact of accreditation policies on the quality of education that students receive. What's Congress getting? What's the American people getting for the billions of dollars that we put into student aid every single year? What kind of return are we getting? And of course, the upcoming reauthorization is the appropriate place for Congress to have this conversation, the hearings, the vetting of these different proposals, not just separate the loan program out and try to deal with it separately, but to deal with it in all of the aspects of how we deal with higher education and with students and their access. Everything from Pell Grants to loans to everything, to college work study, all of these things need to be looked at in a comprehensive manner. That's what we can do with this bill. A one-year extension, fully paid for. Higher Education Act expires the end of this year. We'll have our hearing starting in September. Now we'll begin to look. We'll begin to look at a lot of these proposals and just see what the out-year implications really are. And then next year we can pass a higher education bill and have this as part of an overall policy. And we'll see just how the public and how Congress wants to go on addressing all these issues. That's why this proposal makes such good sense, to just put it off for 1 year. Let's deal with it in the Higher Education Act reauthorization. And with that, let me call on Senator Debbie Stafford now.
Well, thank you, Senator Harkin, for your dogged leadership, and we are looking forward to working with you on getting the job done. We stand here today because we are putting students and families across America first, and I want to thank Senator Reid, Senator Hagan for stepping up and providing us the opportunity to keep interest rates where they are while we solve the long-term problem. And I want to thank Senator Warren, Senator Franken for their passionate advocacy as well. The bottom line is, as you know, if we do not keep these rates where they are, we will see a bump up that will create a $51 billion profit for the U.S. government on the backs of students. We also have seen through Senator Harkin's charts what happens with the deceptively low rates at the beginning and then what happens when it balloons out. You could take that chart and you could look at mortgages and have a pretty similar story, I think, in a number of areas of what happened in housing when people bought in low, ended up seeing interest rates explode. We don't want that to happen to our students. And as everyone has said, this ultimately is about the economy. It's about our values. If we're going to grow the economy, we cannot have students coming out of college with $30,000, $40,000, $50,000, $100,000 in debt that stops them from buying a home, from possibly choosing the career they would like versus the one that they need to be able to pay off the loans. There's so many choices that come into play for students when they have that huge debt that we're talking about. So we have repeatedly tried to work with the other side of the aisle. We've brought forward efforts to make sure that we can continue interest rates at 3.4% for 2 years. Those were not successful. So now what we have under the Reid-Hagan bill is an effort to do a 1-year extension while we work with our chairman, who is absolutely committed to doing the right thing long-term for families and students. Let me also say that if we look at what the House Republican plan would do, it would increase student interest rate debt by $6,465, just the interest rate debt, to add to what they already have. So we're not willing to do that. Student organizations, families across America are telling us, don't do that. What we need to do is keep the interest rates low, don't double the rates, and dig in to do a long-term solution. If loan rates double, nearly 290,000 Michigan students will be hit with an increase, and that is absolutely unacceptable to me. So we're asking students during this time period to raise their voices, families, grandpas, grandmas, everybody who cares about their children and grandchildren and the future of this country, to join us in speaking out and reaching out to their senator between now and July 10th. We will be voting on a motion to proceed to the bill on July 10th. I want to thank Senator Reid for making this commitment and making this a priority when we get back. It's Wednesday, July 10th. We will vote. We will ask every Republican to join us in the ability to keep interest rates low. And we would ask everyone who is interested through their Facebook page or Twitter, we're using the hashtag Don't Double My Rate. And we're asking everyone to get involved over the next few days to speak out about the future of this country and the fact that we should not be making a profit off of the backs of students, and we should not see the interest rates double. They don't have to double. They won't double if everyone votes for the Reed-Hagen bill.
Question?
Yes, sir.
This legislation covers what percentage of Stafford loans, and would this also affect graduate students as well as undergraduates?
It would cover directly the unsubsidized the subsidized Stafford loans, which is roughly 40% of the loans. But it would keep in place the rates for the other loans. Essentially, where it's holding fast at the current rate levels.
Regarding the July 10th date for a vote, does this mean that there's no chance of a vote before July 1st?
We can do it retroactively.
Yes.
Can you talk about the retroactivity and the general issue of deadlines? Because obviously with the school year coming, people are going to have to start to take out loans at a certain point before August, right?
Well, first, that's why several weeks ago we proposed an extension, which we had a majority vote, but it was not sufficient and procedurally to be effective. So we hoped we could have several weeks ago resolved this. Now we're looking at July 1st. There's always, I hope, the opportunity for a last-minute convergence and at least the extension of the rate at 3.4% for the subsidized loans. But the issue of retroactivity, we've talked with the Department of Education, and they can handle that administratively. So if we could get this measure passed July 10th, I don't think there's a major concern about making sure it's effective this September.
And is there a deadline by which you need to have something passed and out of the Congress in order for there to not be problems?
I think in our discussions with the Department of Education, if we're lowering rates, that can be accomplished fairly easily. The problem becomes technically students signing contracts for a rate and then the rate going up. So I think we're in a position where we have a window. But obviously, the reason we're here, the reason 2 weeks ago we went to the floor, is we want this done as soon as we can. We don't want to wait any longer. But what we recognize now is that the best option for students is extension of the 3.4% rate for one more year. Let Chairman Harkin and all of our colleagues that are here today work on, as he so rightly described it, a comprehensive approach. This is not just rates. It's also refinancing loans that are outstanding, allowing and looking at incentives for lowering the cost of education. And that can't be done on the fly. What we can do, and we can do it immediately and must do it, is keep this rate from doubling.
And I might just add and say that given the fact that we are going into July 4th week, we are in a unique position, I think, where we can come back on the 10th, do it retroactively, and not be hurting students at all. I would urge everyone, as they're doing their 4th of July barbecues with their families, to talk about what this issue means for them and to get online and to help us pass this measure on July 10th. But we're going to keep at it until we get this done. This is not some short-term vote. I mean, this is about what's going to happen in this country if young people are continually burdened with debt that is absolutely outrageous, and we're committed to doing everything we can to be able to do something about that.
So student loans is usually an issue that unites Democrats and that they find pretty solid common legislative ground on, but as that poster you guys held up demonstrated, I think, there is some divergence within the Democratic caucus about how to proceed on this, and also a split between congressional Democrats and the administration, who had a particular proposal in their budget that the Senate Republicans then based their plans on.
Well, first, let me say the White House is completely in support of what we are doing. They agree with us that we need to do something temporary so we can address this long term. I don't think anyone would question their commitment to students and education, and we're going to move forward together in lockstep to do what needs to be done long term. In terms of our colleagues, we have two wonderful colleagues that are working hard. That former governors who trying to solve problems and try to do what they can to be able to make a difference. They've been working very, very hard, but I think would probably agree that it's been a very difficult, frustrating situation. And the ideal thing for us is to see a cap on rates, a long-term solution. That's the overwhelming position of the Democrats, and is something that certainly the White House supports in terms of how we move forward.
Do you think that the offset that was chosen for this particular bill is one that Republicans can support? Because with the 2-year extension, there was some consternation because Republicans.
Tom, you should say something.
Well, this offset is, again, one of those sensible provisions in the tax code that should, I think, be sort of dealt with in tax reform regardless of how the proceeds are used. It's an IRA provision that allows individuals to, particularly if you're particularly well off, to instead of taking the money out at 70.5 years old of the IRA, they can give it to a younger relative or younger person, and then effectively it's not taxed because it can be sort of taken out over the course of that person's lifetime. So this is a sensible offset. I would hope they'd agree to it. I think, frankly, let's admit there are some of our colleagues that don't want any revenue to be used to help students. They want students to help the deficit by lowering it. The proposals in the House were billions of dollars of deficit reduction. The initial proposals we saw had significant deficit reduction. So we're saying, first, while we wait to sort this out, let's use an appropriate offset that's not going to disadvantage middle and low-income Americans. Then let's deal with some other complicated and comprehensive issues. So I hope they accept it. But this, again, last year we had the same dilemma, and we found an offset. So I don't think it's the offset. I think it's basically just determining that we are not going to let these rates double, and that's going to take 60 votes. And then also, as the chairman pointed out, with determination, address the whole complex of issues and begin, as some of my colleagues, all of our colleagues have suggested, to once again invest in young people, not make them profit centers for the federal government.
And if I feel, I want to add one thing here, because when we get into priorities, Senator Reed is exactly right on priorities. Let me just point out that this afternoon at 4 o'clock, we're voting on an immigration bill that over time is going to save hundreds of billions of dollars. We'd be happy to take $4.6 billion of that to invest in the future of our country for young people. I also would point out that some of those who have not wanted to spend $4.6 billion in the future for students were willing to spend $40 billion on a fence, 700-mile fence. Well, now we'd like to make sure we have folks educated enough to design that fence. But the truth is, it's about priorities. $40 billion plus, within a blink of an eye. $4 billion over 10, as our chairman would say. We'll just take 1 year of that to be able to make sure that young people and older people going back to school have the opportunity to get the skills that they need to be able to make sure our country is strong for the future. This is not about dollars. As Senator Reed said, this is about priorities and it's about values.
Excuse me?
You started talking about a window earlier. Barring congressional inaction, when will it be impacted?
No, the sooner we do this, obviously, the better off we'll be. It'll provide enough time for students to adjust, for the Department of Education to do all the things they have to do. Our conversations with the department suggest that they have some time, particularly if rates are lowered, to effectively incorporate that before the beginning of the school year. But there's no particular drop-dead date that I'm aware of. It's just the sooner we do this, the better off we'll be. And let me just emphasize two other points I think are important. That chart that Tom showed is quite revealing, and someone alluded to the fact that, you know, a lot of people had fixed mortgages on their house and were convinced to take a really low interest adjustable rate and were told, don't worry, if it gets too high, you can just refinance. Well, you can see where those rates are going. Oh, and by the way, I don't think that chart fully incorporates what the Federal Reserve has just announced, that they are going to begin to back off qualitative easing. Interest rates are going up. In fact, we've seen the Treasury bill rates start inching up. So that chart could be a lot steeper than it is right now. And we could, ironically, in a very short period of time, have students in a much worse situation.
Jack,
Go ahead.
some of those numbers on that chart actually are worse than if we did nothing and the rates actually doubled, you know, to 6.8%. So that actually goes in the wrong direction.
Eric, do you expect to have 60 votes for this bill, and what would happen if Republicans filibuster this as they filibustered the previous 2 years?
We hope they don't, frankly. I mean, this is going to require, I think, as it does so many times here, 60 votes, cooperation, collaboration. But, you know, we are arguing that we don't, for a short run, apparent solution that turns out to be a long-run economic burden on students that, frankly, you know, if interest rates start coming up, you're not going to see a lot of people jump up and say, well, let's fix this, because we'll be in a very difficult situation financially across the board. We have the opportunity now to stop, stabilize the rate at 3.4%, and get it right.
I just want to add that, you know, in our committee, Senator Alexander is a very thoughtful individual. I have appreciated working with him on a lot of different things in our committee. I know he's committed also to getting this worked out. Senator Burr, also a very valuable member of our committee, and Senator Hagan and others. We got a lot of thoughtful, good, bright people on this committee. I think what's happened is, well, you know the crush of things around here. There's this, there's that, there's this, and then there's the crush on the immigration bill to get it done. And so people get focused on that. And then this deadline looms of July 1st. And then there's a scramble to see who can come up with a fix. So everyone is sort of focused on the July 1st thing to try to come up with some kind of a fix. As I said, I bet I've seen a half a dozen different proposals in the last couple of weeks. And so it seems to me that with thoughtful people on our committee, like two who are on the Manchin bill, maybe some others I don't know, that given hearings, giving a good vetting of this, having people come in and looking at this in a comprehensive methodology, I'm not so certain that we can't have a good bipartisan agreement on this in the context, I should say, of the Higher Education Act. We're not that far apart now. We're not that far apart. There's a few things out there. But there may be some other ways we want to address this when you look at all the other facets of what college costs. And that's the way it should be addressed. Senator Alexander he's a great guy, and he's very thoughtful. And I think if we go through this process, I think we can work something out before next summer.
Senators, correct me if I have my numbers slightly wrong, but doesn't this cover only about 25% of the loans, the subsidized Stafford loans? And what do you do about the 75% that are now at record spreads?
No, this chart covers.
Okay, it's still a huge number that are not.
But that's the point on the
They
chart.
aren't set to double.
They're not, but this is the whole point. The real problem is $1 trillion of outstanding student loan debt. In fact, growing now to $1.1 trillion in outstanding student loan debt. This proposal, the proposal that the Republicans have put forward, doesn't do anything about that. And in fact, what it does is it takes the kids who are coming in new loans and locks them. So that what's going to happen is over time, all the new debt is also going to produce more profits for the United States government, or let's say that another way, cost our kids more money. So the issue we have to address is we have to address all of the student loan debt outstanding. And we've got to find the right principle. We think the right principle is the United States government should not be making a profit off the backs of our students. We want to find the right way to get there for all of our students. We have a one-year patch that Senator Reid and Senator Hagan have put in place in order to try to give us the time to do that. we recognize it's just a one-year patch. We found a new way to pay for it. We've reduced the time that we had asked for earlier. This is a reasonable proposal that the Republicans last year, in an election year, ultimately went for. What we're looking for this time is let's do the one-year patch, but listen to the commitment. The commitment is to address all of the debt, and we hope we can do that in a bipartisan manner. But that's the goal.
And remember that I'm sorry.
Yes, no, go right ahead.
That these loans that we're talking about are need-based. That's why they're subsidized, and they're set to double. The other loans aren't.
And as we close, let me just say, we've had over 1 million people so far that have signed petitions not to double the rate. And we're asking everyone this week, hashtag don't double my rate, to be
And no
able.
apostrophe in that,
Yeah, that's right. To get engaged. This is about grassroots democracy. We have enough votes under the regular order in a democracy to pass this. We know the Republicans will filibuster it. We need 60 votes, and we're asking everyone to get engaged. Thank you.
Thank you.
Thank you.
Thank you very much.
You're welcome.